Hey guys, welcome back. I hope you had a really great weekend. Here in Florida, where I am, we had the hottest, most humid, stickiest, most awful weekend that I can remember in a really long time. So hopefully wherever you are, the weather was much better. So let's take a look at last week's price action. We definitely had a wild week before we head into next week. So last week we did open SPY with a gap up. And that was after the prior week. We did have Jerome Powell speaking twice right here. Then we had CPI and PPI. And PPI did come in hot, which means producer inflation is still going up, which is bad news for inflation in general because producer inflation gets passed on to the consumer. So we still gapped up on that Friday and we did make new all-time highs, and we closed at this 35 EMA to close the week before. And Monday we opened with that gap up and pushed up to make new all-time highs, and then came back down to the 35 EMA. You can see this little bounce off of that 35 EMA, and then we dropped, and in that last candle we did get pulled back up and still closed above the 35 EMA. Monday we did have very low volume. Tuesday we opened with a gap up, and again low volume on Tuesday. We did push up and make new all-time highs. And then on Wednesday, we gapped down and we gapped underneath the up gap from Tuesday, creating an island top. An island top is a very strong reversal pattern. And from there, we dropped down and we filled the PPI gap, bounced up, and we got rejected right at the 35 EMA. And remember, that island top was above us. So between that island top and this 35 EMA, which you could see with that huge gap down, the momentum completely shifted down on that 35 EMA, and that level hit us as soon as we came up to it, and we dropped down to the 30-minute 200 moving average, and then we briefly saw an attempt to hold that level, and then we dropped back down. So that does take us to Friday, and Friday we opened up and saw resistance at the 30-minute 200 moving average. And once we hit that level, we dropped down. We got down to the 1 hour 200 moving average, which was also the bottom of the implied move. I had the bottom of the implied move at 548, and we closed at 548.99. So we did bounce at the bottom of the implied move, and we also had that 1 hour 200 moving average there. So beautiful drop and beautiful bounce on the bottom of the implied move. Here you could see we lost the 30-minute time frame completely when that 35 EMA came underneath the 30-minute 200 moving average. So big down week last week, and on Friday we did close down 0.66%. VIX closed up 3.71%, and we did close within the implied move on Friday. And before we move on, I just want to switch over to the weekly candle really quickly. And we did see a weekly bearish engulfing. You can see that big red candle completely taking out the week before. All right, so that was SPY. Let's switch over to QQQ. We opened here with a gap up on Monday, back above the 35 EMA, and we briefly got above last Friday's highs. And from there, Monday and Tuesday, we did make lower lows and lower highs. And on Wednesday, we gapped down underneath both the 35 EMA and the 30-minute 200 moving average, and we dropped all the way down to the 1 hour 200 moving average. And we did see a little bounce there on Thursday. And backtracking really quickly to Wednesday, we did see that fully bearish signal right here when that 35 EMA went underneath the 30-minute 200 moving average. And it did that within that down gap, which immediately turned this down gap into a strong resistance. And we did see that little bounce up on Thursday, and then we lost the 1 hour time frame. And Thursday we closed right here, which takes us into Friday, where we did open flat. We did see that first candle, a bit of volatility. We did bring it back up, and then down, and then we took it all the way down to the bottom of the implied move. Bottom of the implied move was at 473, and we bounced right at that level and closed at 475 and a quarter. And right at the bottom of the implied move, we did also have a previous support. This is from June right here, and we did see a bounce on those two levels. So bottom of the implied move was there, and that support from June. So huge down week for QQQ. I didn't take a look at the weekly candle here, but I'm sure it's pretty rough. Let's take a look. That is, yeah, pretty rough looking candle. It takes out the previous two. Pretty solid pullback for QQQ. We did close down 0.89% on Friday. VXN closed up 1.18%, and we did trade completely within the implied move in QQQ. And then switching over to SPX, we did see that gap up on Monday last week, bounce off of that 35 EMA. We pushed up, made new all-time highs, and then dropped back to the 35 EMA. Little bounce, got back under. You could see only the wick underneath. That day we did get pulled back up above the 35 EMA. Gapped up on Tuesday, pushed to make new all-time highs, and then Wednesday we dropped. That momentum shifted right away. And when we did swing back up on Thursday, we did see that 35 EMA as resistance, and it hit us back down underneath the 30-minute 200 moving average. And when we popped back up, that 30-minute 200 moving average was resistance, and it brought us down all the way. This is on Friday now, to the 1 hour 200 moving average. So on Friday, we opened with first move being up, and then we dropped down to the bottom of the implied move, which was 54.95, and that 1 hour 200 moving average was also there to catch us. You could see only wicks underneath that 1 hour 200 moving average. SPX closed down 0.71%, VIX up 3.71%, and we did close within the implied move. And then IWM had a slightly different week over here. We did open with a gap up to start the week, and this was following the breakout that we had above that 211 level. That 211 was, looking back, you could see right here, it was resistance back in April and in March. And then before that, it was resistance in April of 22. And then the entire year before that, that was a support level. So we gapped up to start the week over that level. Sorry, that was the previous week. We broke above that level, and we followed through on Monday with that gap up and pushed higher, gapped up on Tuesday, took it all the way to the bear gap. This is why it is so important to know where bear gaps are. This was just a huge example. If you had no idea that this was there, then you would have no idea why selling took place at that level. And this bear gap goes back pretty far. It's right here, and that is November of 2021. And you can't see it on the weekly time frame because it happened within the week. But if you take this on the daily time frame, if you go back to November 22nd, 2021, you'll see a big down gap. And that, when we swung back up here, was a resistance. And let me see where that is, right here. So that was resistance right here. And then it was resistance this past week. And look at that big wick that pushed us away from that bear gap. We didn't even touch that bear gap. And look at that weekly candle. So knowing where bear gaps are can be very important. So after we tapped that bear gap, we did get pulled back down to the 35 EMA, saw a little bounce, but if you paid attention during that bounce, the momentum right here, we did have the red signal line, and that did pull us lower. We got underneath the 35 EMA. 35 EMA was resistance, and it did bring us down. We did fill this gap right here. This was the Monday into Tuesday gap. We closed that out. So 1 out of the 4 gaps from our breakout, we did close out. And IWM did close down on Friday, 0.51%. RVX, the Russell Volatility Index, up 0.29%, and we did trade completely within the implied move. And then taking a quick look at the Dow. DIA did open with a gap down, and we did come down and fill this gap from Monday going into Tuesday. We did take it down all the way to the bottom of the 30-day average volatility, so the bottom of the trading range, and then we did close right about where that gap is from the beginning of the week. So if we take a look at that weekly candle, it's going to have this really long tail, and we basically closed right where we opened. So let's see that on the weekly time frame. There you go, exactly. So little open to close range, but huge wick to the upside. Definitely looks like a possible reversal candle to me. And right here, you could see the momentum did shift, and we do have a red signal line on the weekly time frame. So DIA did close down 0.93%, and we did trade within the trading range. And DIA does not have daily options. We have weekly options over here. So that is why I don't have the implied move. And I'm using the 30-day average volatility here instead. But we did close within the trading range. And we did have a pretty solid pullback from those highs that we made on Wednesday. So next week, we start to really kick off earnings season. Last week, we did have Netflix on Thursday and a few big banks, but this coming up week, we do have a pretty good variety of earnings. I'm going to take it over to Twitter. If you're not following me on Twitter, I do have the same name over here, and I did post all the earnings that I found notable for this next week. On Monday, we have Hasbro, which is toys and games, which will give us insight on consumer spending. Tuesday, we have Johnson & Johnson, which is the healthcare sector. Lockheed Martin, defense and aerospace, those are on Tuesday. Wednesday, we have Boeing and UPS. Thursday, some mega caps, Google and Meta. And on Friday, we have energy with ExxonMobil and Chevron. Right, so earnings season starting up in full force. Let's go check out tomorrow's levels. All right, guys, so before we head into tomorrow's trading ranges, if you appreciate my videos, you can show your support by hitting the super thanks button and buying me a cup of coffee. And if you find these videos useful, if they help you to choose better strikes and take better trades, then please make sure to hit that like button, and don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. All right, so starting in SPY, tomorrow's implied move is between 545 and 553. That is from options. The 30-day average volatility is $1 wider in each direction, 544 to 554. And the implied move on Tuesday's contract is between 543 and 555. And to the upside, the first level to look for is definitely going to be this 35 EMA. It is coming down from the top of the trading range. And if we do swing up, we did actually see that 35 EMA as resistance when we swung back up on Wednesday. And we actually closed down here Wednesday. Thursday, we gapped up, and that smacked us back down. So 35 EMA is right here to the upside, just outside of the implied move at the moment. If we get above that, top of the implied move is at 553. Top of the implied move on Tuesday's contract, 555. And that 30-minute 200 moving average is hanging out just outside of the trading range tomorrow. And we did see that as resistance right here. And if you recall, in SPX, it's actually a little bit higher, and we saw it as resistance twice. So a bit of resistance to the upside, but I always say know where your 35 EMA is, because the 35 EMA does act like a magnet. So we could see this bounce off of the 1 hour 200 moving average and then definitely a test of that level. Then just to the downside, we have the 1 hour 200 moving average. You could see the bodies of these candles here sit right on top of that level. We did attempt to bounce. We didn't get very high. In fact, we closed right on top of that level. So both the 1 hour 200 and the 30-minute 35 EMA are going to be critical levels to look for right away at open tomorrow. And then if we do break this and we continue this downward momentum, the bottom of the implied move tomorrow is 545. We are pretty oversold here. I would think we're due for a technical bounce here. But if we do get under it, 545, bottom of the implied move, 543 is the bottom of the implied move on Tuesday's contract, and then that 50-day moving average, finally we are back at that level, is just underneath the trading range. So if we don't see that tomorrow, which it is outside of the trading range, we may see it later on during the week. So a little bit more to look for than when we were rallying with no resistance. So that is SPY. Switching over to QQQ, the implied move over here is between 470 and 481, and that is from options. 30-day average volatility, $1 wider in each direction, 469 to 482. Tuesday's contract, the implied move is 467 to 483. And to the upside, we also have the 35 EMA right here. It is right at the top of the implied move. And the last few times we swung up to it, we didn't really get that close. But we have hit oversold, and we have even a bullish divergence here a little bit in our indicator. So 35 EMA is likely a level we see tomorrow. And if we do get above it, top of the implied move is 481. And top of the implied move on Tuesday's contract is 483. And then we have that 1 hour 200 moving average above us. And we did break down underneath both the 30-minute and the 1 hour pretty quickly. So it's very possible that we see at least a swing up to that 1 hour before we head into some of the bigger NASDAQ earnings later in the week. And then underneath us, we do have this previous support level. It goes back to late June right here, and we did see a bounce right at that level on Friday. That was also the bottom of the implied move on Friday, so the two together likely gave us a little bit of a boost, but we are just above previous support. And then if we do break that level, we do have the 50-day moving average at the bottom of the implied move. And if we break that, that would be a pretty big move to start the week, considering we don't have any economic data tomorrow. But if we do break that, 470 is the bottom of the implied move for tomorrow, and 467 is the bottom of the implied move for Tuesday. And we also have this gap that is a bull gap, and that goes back to June, and this is June 11th going into June 12th. I'm not exactly sure what this gap is all about. I still didn't go back to look for it, but it is a bull gap, so it has the possibility to act as a support. And with that 50-day moving average, I would think that if we do come down to that level with how oversold we are right now, that we would find a bit of support there. So that is QQQ. And then switching over to SPX, the implied move over here is between 54.65 and 55.45. That is from options. The 30-day average volatility is $5 wider in each direction, 54.60 to 54.50. So both options and the chart are pretty close. And then the implied move on Tuesday's contract, 54.50 to 55.55. And to the upside, that 35 EMA cutting through the top of the trading range. It is currently just outside of the implied move. Let me change the color there. And again, always remember where your 35 EMA is. We do tend to swing to it and test it before reevaluating and choosing a direction. So if we bounce here, 35 EMA is a critical level to look for. And again, we are pretty oversold after last week's moves. We definitely still have more room to go down. We haven't crossed back up, but we are pretty oversold. So personally, my opinion is that we probably swing up and get a little bit above that level. Wouldn't be surprised if we saw that 30-minute 200 moving average pretty soon. And top of the implied move for tomorrow, 55.45, and for Tuesday, 55.55. If we do break the first level to the downside, which is the 1 hour 200 moving average, you could see we did find support on Friday at that level. We do have about 2 hours of wicks that did get under that, but the bodies are completely above it. If we break that level tomorrow, 54.65 is the bottom of the implied move for tomorrow, and 54.50 bottom of the implied move for Tuesday. And we do also have a support right here. This goes back to the 1st of July, right before that 4th of July rally. We did find some support around this level, and that does line up with the bottom of our implied moves for the next 2 days. And even before that, you can see that we did see a bit of support right around here. So that does line up with Tuesday's bottom of the implied move, and definitely has the possibility to catch us if we drop. And then underneath all of that, we do have the 50-day moving average. I do think we'll be seeing that level sooner than later, but we don't necessarily have to drop. We can wait for that level to catch up. And then switching over to IWM, the implied move over here for tomorrow is between 213 and 220. That is from options. The 30-day average volatility is $2 wider in each direction. Actually, it's 3 to the upside. So 211 to 223. And Tuesday's contract, 212 to 221. To the upside, that 35 EMA. And it is going right through the middle of the implied move, not too far out. So if we do swing up, I'll keep an eye on how that level reacts. If we do get above it, see some support, then maybe 220 tomorrow. And top of the implied move on Tuesday's contract, 221. And underneath us, we do have a few gaps in tomorrow's trading range. We have that up gap from Monday of last week. So we closed here on Friday and gapped up. And then we have the bottom of that gap is just under 214. And then outside of the implied move on Tuesday, but still within tomorrow's trading range, we have that up gap from right here. This is from Thursday going into Friday, and that is where we gapped over that long time resistance that goes back for a few years. It's right here. That is 211, and we did see that as prior resistance and resistance here. And then the year before that, this is in 2021, we did see that as a pretty consistent support level. So huge level to the downside and just underneath the implied moves. We are definitely oversold here from that pullback off of that bear gap, but we still have room to go down. We have not crossed back up with momentum. And if we do start selling off a little bit more to correct this move, then 211 should definitely be on your radar, as that has been a really big level over the years. And then DIA, and this one is set up a little bit differently only because we have only weekly options. We don't have daily options over here. And this is the 30-day average volatility, which we are going to use as tomorrow's trading range. And that is between 397 and 408. And then the implied move for Friday's contract as of right now is between 396 and 410. And to the upside, first level to look for is going to be the 35 EMA. It is going right through the top of the implied move. And we just got underneath the 35 EMA after a pretty strong rally and seeing that level as a support. So now that we're underneath, we need to look to that 35 EMA as resistance. And until we get above that level and see it as support, it is our first level of resistance. We are still not bearish in the Dow. To be bearish, we need to see this 35 EMA cross underneath the 30-minute 200 moving average, and you can see we still have a lot of room, and we are neutral right now. And if we get above that 35 EMA, top of the 30-day average volatility is 408, and then top of the implied move for the week is 410. And then to the downside, we do have this up gap right here. This is from not last Friday, but the Friday before that, the one starting the week. Friday going into last Monday, we have this up gap, and that bottom of the gap, which bottom of gaps tend to be support, that is just under 400. And underneath that, we do have the main support on this time frame, which is the 30-minute 200 moving average. That is cutting through right through the bottom of the trading range for tomorrow. And then underneath that, 397 is the bottom of the 30-day average volatility. Underneath all of that, if you're looking later into the week and we do start seeing signs of being bearish, and you're looking later into the week, that 1 hour 200 moving average is at the very bottom of our trading range for tomorrow. And thank goodness I am done with tonight's video because I am starting to lose my voice. That is what I've got for tonight, and have fun, trade safe, make sure you take profits when you're up, and I will see you guys